Good morning, everyone. It's Henry on the live stream. Good morning, everyone. It's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. Everyone can hear me and can see my screen very clearly. So in today's live stream, we're going to start by talking about the US dollar and what the market is doing so far. And as you can see, we're currently on the 4-hour time frame. We had some level of downside move on the dollar between yesterday and this morning, which was quite surprising to me because I wasn't really expecting that down push, which also ignited an upward move on the foreign currencies. Talk about the AUD, Euro, US dollar, and all the rest of them. And so far, you can see how price came up to this position. There was a daily inefficiency resting right there, which I outlined previously. So I'm going to remove all this from my chart so you can see what I'm talking about. So right here, you can see very clearly there was a daily inefficiency resting right here. And you can see how nicely price mitigated that daily inefficiency. And after that mitigation, we saw that intraday bearishness. You can see how price displaced to the downside. But after that displacement to the downside, there wasn't any significant break of structure to the downside whatsoever. Price just displaced to the downside, still sustained this low. And then now we have a high, a low, and a high. So this right here is a higher high. So I wouldn't really be surprised to see after this low right here, I wouldn't be surprised to see another higher high breaking above this high and price potentially targeting to revisit this key level right here. This key level right here is the equilibrium zone. I know you must be wondering how come my Fibonacci lines are within they are going from the bodies of the candle and not from the wicks. The reason for this is because you need to understand that the volume is resting at the bodies of the candle. You can also use the wicks to draw your Fibonacci. You can use that, but personally, for me, what I've realized from my personal experience is that when you draw that Fibonacci on the 4-hour time frame from the bodies of the candle high to the bodies of the candle low, you realize that this gives you a better overview for where price could potentially mitigate. And let's see how that works. So right here, you can see this is showing us only the bodies of the candle, only the bodies of the candle. The wicks can be manipulated by manually, or the algorithm or the broker. Anything can actually make the wicks to be a little bit higher than this other one, and the other data feed you're getting from this broker or that broker. The wicks can be a little bit different from each other. So that is why sometimes using the bodies of the candle makes it easier to see key levels to anticipate for price to retest. I already outlined how to do this yesterday, but as you can see, this is how I do it. I just use the line chart, and right here is the high, right here is the low. And so far you can see how nicely price went to the upside, then we saw rejection, and now we're still seeing another impulse move, still giving us that telltale sign that this key level right here is the next drawn liquidity that is magneting price to the upside. So potentially, if we see price retest this key level, that is the only time we'll be looking for a potential sell on the dollar and a potential buy on the foreign currency. So this is what I'm watching on the dollar. We're still going to look at the foreign currencies as well to see what the foreign currencies are doing as well. So this So right here, I just posted the link again in the group. So if you didn't get it before, you can just click the link and it's gonna take you into the live stream. So if you cannot hear me or cannot see my screen very clearly, please let me know so that I can have that fixed immediately. Cannot hear me or cannot see. So back to the chart on the Aussie dollar. So basically I woke up this morning and I saw Aussie dollar had an impulse move to the upside, expanding ridiculously to the upside. Did I take any trade? Did I try to buy it? The answer is no. And why not? The reason is because it hasn't mitigated my buy zone. Anything price is doing above my buy zone, I'm just going to be on the sidelines. I'm not going to try to rush in. I'm not going to trade it. And the reason is because I have an understanding of how to be patient, which is one of the core skills you need to have as a trader. If you're not patient and you're always impulsive, it's going to be very hard to make money and also harder to keep the money that you make in trading. So far, you can see this is our high and this is our low. And you can see I also drew my Fibonacci from the bodies of the candle. And the bodies of the candle resting right there, you can see this is the extreme premium zone. And you can see how nicely price came into that extreme premium zone, mitigated the inefficiencies there. But look what happened. It dropped below the extreme premium zone, failing to close inside it. It's literally just this very small 1 or 2 pip close, and then it displays to the downside to show you how this works. So let's say we draw our Fibonacci from the wicks. You can see that it also still aligns with, so if we're drawing it with the wicks, you can see that it didn't even close inside this key level. It didn't even close inside. So this just gives you an overview of how efficient using this Fibonacci is when you use it correctly to see the key levels that price could potentially come into, key levels to buy from, key levels to sell from. This works exponentially well. So now let's look at this on the line chart. I'm going to remove everything on my chart just for 1 second so you can see how perfect this works on the line charts. You can see on the line charts, what do you see right here? This is a low, this is a high, this is our extreme premium zone. Look at how on the line chart it aligns perfectly. Price literally came to this position and displaced to the downside. So if you were looking for a sell, all you will now do with this information is you mark this key level as your sell zone. The moment price comes into this key level, taps this key level, what you do, you go into the smaller time frame and you start to look for telltale signs for this to displace to the downside, to sell it. Does that make sense? The same thing goes with us wanting to buy Aussie dollar from this key level. You can see the orange, this right here. This is our Fibonacci. So I'll just try to remove everything irrelevant from my chart so we can just focus on what matters and just not pay attention to anything else. So I'm gonna remove this one because I don't need it anymore. And then let's go back to 4-hour time frame. So on the 4-hour time frame, I'm just gonna remove this as well. I don't need it. I have an understanding of what's resting right there. So what else? And I'm gonna remove this one as well because the sell side liquidity has also been mitigated, so I don't need it anymore. So the only thing I need right now is to understand my extreme discount zone, extreme premium zone. You can see the extreme discount zone. Let's go back to the line chart. And on the line chart, you can see this is the extreme discount zone on the line chart. So which means that what I'm anticipating to see is for price to come in here. Once price comes in here, I see price coming here on the bar chart. I'll be looking for a 1-hour shift to market structure to the upside. Right there, you can see that very clearly. And this right here, this was the last down close candle before an expansion that broke this 1 hour high. There's a 1 hour low here, high, low. Let me wipe everything from my chart so you can see it very clearly. There's a low here, there's a high here, and this is a low. Very, very clean. And this is the low, and this is the break of structure. And this right here is the last down close candle. Before, this was the last down close candle before expanding to break structure. So you can see it very clearly, the last this black candle. So let me put everything back on my charts. You can see the last black candle. Let me just put something to basically make it stand out. So I'll use red. Now we'll go back to the 4 hour time frame, and then let's go back to the line charts. Going back to the line chart, what do you see right there? You see that the red line, being the last down close candle, also aligns with the extreme discount zone on Aussie, which means if price should for any reason, whether it's due to the high impact news coming out tomorrow, if for any reason we see price drop into this key level and we see a 5 minutes break of structure to the upside, this is giving us a go to buy Aussie dollar. Buy Aussie dollar. So this is how you do analysis. This is how you understand key levels that are high probability key levels. And when price comes there, you take that trade. Now, it doesn't mean that you taking that trade, the trade is definitely going to work. It doesn't mean it's always going to work. There's going to be times when it's not going to work. There's going to be times when it's going to work. But all that matters is out of 10 trades, how many times does it work? And out of that 10 trades, what percentage did you make? If we do catch a good setup from here, first thing we'll be targeting would be this low resistance liquidity high resistance right here. That's the first target. And from here on the 5 minutes time frame to this key level will give us a minimum of 1:7 to 1:10. Minimum. And we're not just going to enter with a 5 minutes time frame. We're going to enter with 5 minutes time frame, our first entry. Our second entry is going to be with 2 minutes time frame. All we need to see is once the 5 minutes high gets broken, we're using the high as entry, and we're also waiting when price retests that high. We're looking to see a smaller time frame shift in market structure in 2 minutes time frame. Once we see a 2 minute shift in market structure, we're still using the 2 minutes high that got broken as a re-entry, and the low, giving it an extra room about 3 pips to the low as stop loss. So which means that those two trades, if those two trades play out, we're looking at price running this buy side liquidity, low resistance liquidity. Price running through it, the first entry could basically give us a 1:7. Second entry could basically give us like a 1:8 or 10. That is like literally 15 to 17% just on one setup. So this is why a lot of the time it's very essential to be patient. It can take you days to get into a trade, but it doesn't really matter. At the end of the day, what you're looking at is when you're on a trade, is it a profitable trade or is it going to be another losing trade? It doesn't mean that taking losses is not... Taking losses in trading is inevitable. Everybody takes losses. I take losses. Every single trader in the world takes losses. Any trader that says he doesn't take losses, he is lying to you and to himself or herself. So that being said, looking at this point of interest as well, you can see that on the 4 hour time frame, we also have an inefficiency resting right there as well, which makes it even higher probability. And we're also looking at the fact that we created a high here, a low here, a higher high, break of structure on the 4 hour time frame. So everything resting right here is liquidity. This is a low resistance liquidity resting right here. You can see that very nicely. That's what's resting right there, low resistance liquidity. You can see the low resistance liquidity resting right there perfectly. Price will find it so easy to slam through that position, and look what happened. Easy. Slam through that position, and then we saw this expansion. Personally, I'm not going to try to sell this to run this low. The reason is because the way I trade, I only trade with one direction. I don't counter trend. If the market is bullish, I'm only going to buy it. When I see a good opportunity, I'm going to buy it. If I see no opportunity, I'm just going to be on the sidelines. Another thing I want to show you is also look at the fact that we have a high resistance liquidity resting right here. You now see how this all aligns together. From this key level being an extreme premium, number one confluence, having an inefficiency, number two confluence, high resistance liquidity resting right here, number three confluence, now giving you a telltale sign for you to look for sell when price comes into this position in anticipation for a run on this sell side liquidity. A lot of traders are going to buy this from here. It may work, it may not work, but personally, I would rather wait for price to come here and buy. Even if it doesn't come here and continues higher, then it is what it is. Next week, we look for another better trade. So this is how you use high resistance liquidity, low resistance liquidity. You can see someone who was selling from here in anticipation for price to run the low resistance liquidity. They made money because eventually look what happened. If you sold from here and then price came to the downside, profit. If you sold from here when price came in here, you're in profit. You can literally close it right now in profit. I looked at this morning and the trade, it didn't make any sense for me to buy or even to sell it. I was just like, this is not the kind of setup I trade. But how to enter this kind of trades, I'll show you how to enter this kind of trades. It's really very tricky. And why it's tricky is because there's no break of structure. There's no break of structure because usually I'll say wait to see something like this. This would be a break of structure. And then you now want to see a retest and then you sell. You sell from this retest, stop loss 1 or 2 pips above this high. That's how I would have sold this in a normal scenario. But one thing I need you to also understand is this is not the only way you can sell. For example, if you're anticipating for price to drop from a certain key level, if you see something like impulse move into that point of interest, and then you see a displacement, and within that displacement you're seeing inefficiency, you can use that inefficiency as an entry for sell, stop loss 2 pips above the high, and anticipate for price to come in for a retest and then sell. This is also a beautiful scenario where you can sell, and that is exactly what happened right here. You can see how price impulse move to the upside, displaced to the downside, leaving inefficiency. You can see the inefficiency. This inefficiency would have been your entry, stop loss 2 or 3 pips above this high, and that's your trade. The high is 4 pips, so you can just give it a 3 pips stop loss. And that's your trade. You target sell side liquidity resting right here. And price is literally at your take profit position. This is almost a 1:6. So this is another concept of how to trade, but I rarely use this concept to trade. I rarely use it, and the reason is because I just want to be a master of one concept. I don't want to be a master of this concept, that concept, the other concept, 4, 5, 6, 7, 8, 9, 10 concepts. I don't want to be that person. I want to be the person who, when you look at my strategy, you see I'm using the exact same strategy to trade, the exact same strategy. I'm using it to trade whatever pair I'm trading. And if that strategy doesn't work on that pair, I'm not trading that pair. I will only trade if it's 1 or 2 pairs that my strategy works on. I'll only focus on that, and that will make me all the money that I need from the market. You don't need to focus on 2, 3, 10 strategies, 10 pairs to actually be consistently profitable in the market. Less is more in trading. That is what I've learned from my journey. Less is more. So that being said, you can see so far this is a beautiful trade, and the trade played out very nicely so far. But personally, I'm not on the trade, and I'm not intending on trying to sell this, but I'm just showing you for future reference for people who still feel like the strategy that I use is not the best for them. If you feel like you want something else, this is another strategy entry strategy that you can use as well. You can also add it to the things you already know and back test it and see how it works for you in the chart before trying to use it on the live account. So far, I still believe this low is going to be the next run on liquidity. Remember, non-farm payroll is tomorrow, which means we're not going to be streaming tomorrow. But if we do see any trade that is high probability, we're going to share with you all, our members, to make sure we all make some money. But if we don't see any setup, then we're just going to have to be on the sideline. So we'll look at, let's take a look at USD card. Like USD card, this is something I was talking about this entire week. I said it openly. I do not like the structure of the market on USD card, irrespective of the fact that each time it's come up, it's been an opportunity to sell and make money, sell and make money, sell and make money, sell and make money, sell and make money. But I never sold it. All these positions, I outlined it in the live stream. I marked it and I said I wanted to see it sell from those key levels, but I never sold it any of those times. The reason, because I don't like the impulsive nature of it coming to the upside time and time and time again. It's just showing me something that could potentially mean we could be doing all this impulse move and we just keep looking for sell, and for no reason we see an impulse move to run buy side liquidity. That is very possible. And look what happened yesterday. High impact news came out on USD card, and we just saw a huge spike to run out the buy side. So anyone who was selling it from here, the stop loss got violated. So this is one of the reasons why you don't have to trade every single pair. Even if it works with your analysis, you don't have to trade all of them. You have to consider the ones that actually respect your strategy really well. Literally the best of the best. That should be your criteria for trading. And this one is not the best of the best for my strategy. That is why I've not really traded it for quite some time or ever shared any trade idea on it. I've just been watching it, but I've not really been trading it. But that being said, I was watching oil because I wanted to see if I can get in a buy on US oil. Price came into my point of interest, so we have a 2-day inefficiency resting right here very nicely. Price came into it. I was anticipating to see a 30-minute shift to market structure from that position, but eventually price is not showing me what I want to see. What do? I stand on the sidelines. It's really that easy. Now, the fact that I'm waiting for price to come in here, it doesn't mean for certainty that this key level will definitely be the support zone before a reversal. As long as this low stays sustained, if price comes to the downside and takes this low right here, and I see a 30 minutes or a 1 hour break of structure, I'll look for a buy for this to continue higher. Why will I do that? Because the overall market direction, market structure is bullish. What if it's happening on the intraday time frame? I don't really care what's happening, because price can be going to the downside on the intraday level and then eventually continue to the upside, because that is the overall market direction. And in this case, the overall market direction is to the upside. You're looking at this. It's bullish. Very bullish. So price could potentially be hunting for liquidity, and this could be the liquidity. And so far you can see there's no 1 hour break of structure. None. Zero. So I'm not going to buy it. I'm not going to jump in. I will be patient. And if eventually price drops to the downside and then I see a 1 hour break, that is when I'll start to look for a buy on US oil. That is my analysis. If you do have any questions based off my analysis, feel free to drop it in the chat. I appreciate you all, and I'll talk to you in the next live stream. Have an amazing day, everyone.